that's why they're selling out.
Also, I just want to mention there's really a steep fall that you're seeing in PSU banks right now. And remember, this whole PSU space is something that has had a very volatile, of course, last year was very good. This year, the sell-off began. But now this has become a vulnerable pocket once again. Union, UCO, PNB, Bank of Maharashtra, Bank of India, all these stocks are down anywhere between 2 to 4%. So there's one pocket that's selling off both in terms of price as well as volumes. And the market now is almost inching towards a 200-point loss. So not looking good at all at the moment.
And also there's absolutely no counterweight, right? Earlier in this year, IT was a constant counterweight, though India was underperforming. Now, I mean, you've got this whole global overhang becoming much, much more vigorous. And IT is no longer that one batsman who can kind of support you and make you stand through the innings. So that's the market that we're in the midst of. Let's take the conversation straight away to our market master of the morning. Nilesh Shah, MD at Kotak Mahindra AMC, is with us now. Nilesh, great to have you with us. Doesn't feel like a Friday, I'll tell you what. And I guess we can't help it. We're just dealing with so many of these negative headlines from the US, right? And the last one was this SVB Financial. The moment you hear, any financial entity trying to make good for bond losses, and that number couldn't go away from my head. They've sold off securities available for sale to the extent of $20 billion, and they still have to raise equity capital. It just makes you feel so nervous. Your thoughts on everything that we're hearing in India and around the world?
So let me begin with a Friday mood, little bit of lighter vein.
Good, we love that.
In some sense, SBC in US is like PMC Bank in India. In a trillions of dollar economy, does a $200 billion bank matters? Number two, they have been lending to startups. Obviously, it's high risk, high return lending. So I don't think so. It is the events, which is this particular event, which is a worry. But the real worry which market is trying to figure out, does Fed have maternal instinct or paternal instinct? And again, as I mentioned, I'm trying to be in Friday mood. Maternal instinct means Fed will show the danda of higher interest rates, but will not hit the market once market behaves. Paternal instinct means Fed will not only show the danda, but will also hit irrespective of what will be impact on growth or recession. The market is trying to get adjusted to Fed's comment on higher for longer. Not long ago, Fed terminal rate was 5%, then it became 5/4, then it became 5.5%, now it is 6%. If you are going to get 6% risk-free return in US Treasury, then equity risk premium has to go up, valuation has to come down. So this is what market is trying to figure out. Is Fed going to remain higher for longer? If yes, how long? And what will be the consequent damages on growth and recession? Remember, Paul Walker could raise interest rates in US to 14%, almost 10% real interest rates, because at that point of time, US was not heavily leveraged. But today, Jeremy Powell does not have that luxury. He's still running negative real interest rates. But at $31 trillion debt, at more than $1 trillion credit card debt, more than $1.5 trillion student debt, they really don't have too much choices. This is where market is trying to figure out what is Fed up to.
Okay. Nilesh, I take that point. I mean, SVB may not be a barometer of what's happening in the rest of the banking industry in the US, but it surely raises some risks of what could perhaps happen as we enter into a recession. Some people are talking about a mild recession, but so be it, right? There will be that ramification even on our own markets. As an Indian investor, what do you do now? What's the most prudent strategy? Do you stay cautious? Do you raise your cash levels? Because this could go either way. What's the advice to investors?
So undoubtedly, Sonia, is SVB a canary in the coal mine? Is it predecessor of what's going to happen in US banking sector? That undoubtedly is a worry. We just have to hope and pray that Fed does not hit up danda so much that the entire system goes through a crash like 2008. I'm sure Fed will have some institutional memory of 2008. From our point of view, we have been saying for some time that this is a market where India is trading at historical average valuation, but we are at a significant premium to all other markets. This will push some FPIs to book profit in India and move to cheaper markets like China, Taiwan, Korea, South Africa. We will see, mixed reactions in the market up as well as down. At lower level, there will be buying by domestic and hopefully global investors also. At higher level, there will be selling pressure. So we are looking at a range-bound market from here till probably all the way up to May 24. Global as well as local event will continue to pull market in both directions. US Fed pivot is critical from a global point of view. Russia-Ukraine headlines might have shifted to page 3 and 4, but it is still simmering. Energy prices, we always have to keep an eye on. In local market, corporate results for September and December 22 were relatively subdued. Consumption remains subdued, and there is general election in 24. So there are enough events which will keep market moving on both the direction. This is a market where you buy on correction. You keep dry powder to buy on correction.
All right. Hi, Nilesh. Good morning. I like the way you're putting, all of this into context. But Nilesh, you spoke about a range for the index, right? I think at going by the headlines, a time-wise correction is something that the bulls will bargain for. In terms of a range, though, what are you looking at? On the downside, how low can we go?
I wish I can predict downside. I have never been good at that, and that's why I stopped predicting. That's why you're calling me here again and again.
Yeah, Nilesh, but a lot of our audience out there, they want to know 16,500. Will we see that again? Are we going lower than that? So in the worst case scenario with the current headlines, the Fed danda, as you have been saying, that sort of a tone that's coming out there. Earnings have been a little bit subdued. Consumption could take a bit of a knock. What could be the downside from this 17,350, 17,400 level?
So I really don't know what the downside will be. But I do know that if market goes somewhere around below 15 times 1 year forward earning, that's roughly about 1,000 rupee, 1,000 to 1,050 earning per share for FY25. If market goes 15 times below that, then it's a great time to buy. That's the level where you should be thinking of becoming overweight. Now, whether markets will go to that attractive level or not, who knows? A lot of things will depend upon how events shape up. Some of the events will be positive, some of the events will be negative. And that's where I believe markets are more likely to be range-bound rather than in one single direction.
So just to derive that number, 1,050 odd, 15 times should be 15,750 approximately, 15 times forward earnings. But Nilesh, that earnings picture is getting a little sketchy. As you said, last quarter's earnings as well, suddenly there are doubts of that 1,050 number. Do you think that's at risk?
So 1,050 already has been revised downwards. And while there has been some subduedness in the corporate earnings, the commentary has not been that bad. September as well as December 22 quarterly results have been impacted significantly by inventory correction. People had bought raw materials at higher prices and they couldn't pass the price increases to the consumers. In consumption space, there is some subduedness, but banking and IT is producing reasonably good results. With China opening up, hopefully metal and commodity prices also should provide some respite. So overall, while the earning downgrades have happened, they are not very, very steep. They are quite comfortable as per the market. And hence, I believe that anywhere between 1,000 to 1,050 Nifty earning per share for FY25 is still in the pocket.
Okay, all right. We would have loved to chat some more, but maybe at another time. Nilesh, thanks a lot for taking the time out and speaking to us at CNBC-TV18. Appreciate your thoughts. Hope you have a great weekend. We'll chat with you again very soon. The market is not having a great Friday at all. If you're a bull, specifically, the Bank Nifty is now down about 1.5%, and the Nifty is below the 17,000.